What's up everybody, Nate here, and we just got the most recent inflation numbers for August 2022, and for the second straight month in the United States, inflation has started to come back down. Woo! It's about time! But while the overall inflation number of 8.5% did fall down to 8.3% in August of this year, broader inflation like food prices and shelter prices actually started to go way up. You said what now? And now investors are worried that the Federal Reserve and our economic policies are not really doing much in order to bring down inflation in 2022. That could mean that inflation is now deeply entrenched in our economy, and in the broader market, prices are about to go way up. So today I want to take a minute to go over the inflation numbers, what is actually going up in our economy right now, what's going down, and how all of this is going to affect the stock market, our economy, and the Federal Reserve and their plans of raising interest rates. All right, so let's go ahead and break down the numbers. So overall inflation did fall from July to August. That is a really great thing. It fell from around 8.5% down to 8.3%. This is mainly due to energy prices drastically falling in the United States, with energy prices falling by around 5%. Gas prices alone fell by around 10.6% in the Consumer Price Index. Now, the Consumer Price Index is how we measure inflation on a month-over-month basis, and we do that by consumer prices. We look at a basket of goods and services in our economy, and we decide if things are going way up in price or are things going way down in price. And if things on average are going up, then you have really high inflation. And over the last year or so, we have had extremely high inflation, as inflation recently went as high as 9.1%. Used vehicle prices actually went down for the entire month by around 0.1%, and that is pretty much the end of the good news, because almost everything else in our economy went up in price during August. Medical care services went up by 0.8% and 5.6% year over year. Grocery prices in particular went up by 13.5% year over year. Food prices are now up over 16% year over year and went up by 2.2% in August. Shelter costs went up by 0.7% in August and are now up by 6.2% over the year. New vehicle prices are up by 0.8%, and even though gasoline prices did come down pretty significantly from their $5 plus average highs in the US, they are still $1 plus more than they were over a year ago. So gas is still costing Americans a whole lot in their gas tank. So the bottom line here is that inflation is going up, and the inflation problem in the United States is a super unique one, because over the last couple of months, economists like from the Federal Reserve have been saying that the reason inflation is so high is because of things like the war between Russia and Ukraine. And of course, we have a lot of supply chain issues. Things like energy costs and shelter costs going up, well, that is a big problem for everyday Americans, but they also hold a huge portion of the Consumer Price Index. So once they go back down, inflation in general is going to go way back down. At least that was the idea. Now we have other things in our economy that are starting to go way up, and that's causing inflation to basically stay exactly the same. Don't get me wrong, inflation coming down from 8.5% to 8.3% is a good thing, but inflation in our economy is still extremely elevated. Normally it's only around 1 to 3%, so we are well over double and even triple where it's supposed to be. And we are halfway there to the historic highs like we saw during the 1970s and 1980s, when inflation was around 15%. Well, so now the bigger question is, what exactly does this all mean, and how is this going to affect us? Well, the first thing I want to talk about is the Federal Reserve. The Federal Reserve has a really big decision coming up on its next FOMC meeting later this month, and it's going to decide how it wants to raise its interest rates in order to battle inflation. The Federal Reserve has a few different monetary policies and a little bit of control over how high inflation gets, because they are the ones that ultimately print money, and they are responsible for how much money basically circulates throughout the economy. Over the last couple of years, we've seen really low interest rates and a ton of money printing, which means there's been a lot of spending. When you have a lot of spending though, well, that means that businesses have to kind of recoup some of those losses and some of those costs by raising prices. They have to build more factories, they have to hire more workers, so there's a lot more costs associated with that. When they do that though, well, now people don't make as much money anymore. anymore. So they have to make a lot more money, and that's why we're starting to see wages in the US go up too. And this is one of the biggest symptoms of inflation. When you have all of this money circulating around, when you have a ton of money in your economy, that money gets spent and then everything else starts to recalibrate. That's why we have high inflation. But now in 2022, the Federal Reserve is doing the opposite. It wants to suck out that demand by raising its interest rates instead of lowering them. So when interest rates go higher, that makes it a lot harder for banks and financial institutions and businesses and consumers to borrow money. It's a lot harder for you to get an auto loan. It's a lot harder for you to get a mortgage. And when there's not as much spending, those dollars don't go into our economy. They come out of our economy. That means that inflation can come down because nobody is buying anything and prices don't need to go up anymore. But the Federal Reserve has a big decision to make during its next FOMC meeting later this month when it comes to inflation. So it has been raising its interest rates very aggressively, but as of right now, its interest rates sit at a neutral level. So they're not really hurting the economy, but they're not really helping the economy either. Now they have a decision. Are they going to continue to restrict the economy by eliminating demand and raising their interest rates, or do they feel like inflation is really coming down and they can stimulate the economy by lowering their interest rates? This is going to be their next decision that they have to make. Most experts and investors believe that the Fed is going to continue to raise interest rates, and the Federal Reserve has basically come out and said this. They believe that inflation is, well, still a big problem, and they would definitely be right. So they are going to do everything in their power to bring inflation down, even if that means restricting our entire economy. So they are going to continue to raise their interest rates, but by how much? With inflation coming down a little bit, I wouldn't be surprised if the Federal Reserve does a 50 basis point hike in September. A lot of experts and investors have been looking for a 75 basis point hike, and this is because inflation just continues to go up, but overall inflation is actually going down. One thing I didn't mention earlier is something called core inflation, and this is what the Federal Reserve uses when it kind of measures if inflation is going up or down in our economy. Core inflation is a little bit weird when compared to headline inflation, which was 8.3% in August. Core inflation actually went up though. It went up to 6.3%. Investors and experts were hoping that it was going to go down to 6%, so it actually is starting to go up, and core inflation excludes some volatile industries like food and energy. With core inflation continuing to go up though, with excluding some of those volatile industries, it shows that broader inflation is still rising in our economy. That is not good for the Federal Reserve. So I would think that we're going to see a 50 basis point hike, but we definitely could see another 75 basis point hike. And that means that everything in our economy gets constricted. Now, the second thing I want to talk about is the stock market. Now, as soon as the stock market got wind of this brand new inflation report, we saw one of the biggest stock market sell-offs since May of this year. The Dow actually dropped at one point by 1,100 points. The reason for this is because they are afraid that inflation is now deeply entrenched in our economy, and other broader markets are starting to get affected by all of these price hikes. Now, what you got to remember is Wall Street and the stock market is just a group of businesses, right? So there's a bunch of businesses that have their public stock that people can buy and sell whenever. But when we have a lot of problems in our economy, the stock market is affected by that because businesses are affected. Now, businesses are going to have a lot more production costs. They're going to have to start paying people a lot more, and this is a much bigger problem because they just don't have the money to do so. We have seen some massive layoffs in 2022 so far, from tech giants to traditional retailers, because these businesses just don't have the money. When the Federal Reserve started to raise its interest rates earlier this year, well, that meant that businesses and people did not have as much access to money. Investors cannot take on that same debt that they could over the last couple of years because it's really expensive to take on new debt. Interest rates are going up, so if they want to invest in a company, they have to use their own money, and that is a huge risk. So they just aren't doing that, which is exactly why we've seen the stock market steadily drop in 2022. Investors are not pouring that liquidity into the stock market anymore because, well, they just don't have the money to do so. This means that a lot of your tech startup IPOs and some of your just bigger companies in general are starting to shrink. They don't have that expansion anymore, and they have a whole bunch of people that they need to pay and products that they need to produce. They can't do that effectively if they have no money. economy, meaning there's going to be layoffs and companies are going to not have as big of earnings reports. They're going to have smaller profits. They're going to have smaller revenues, and that's not conducive to growing. So investors want to get out. They believe that, well, we're going to start seeing a bottom sometime soon, meaning that where we're at right now, well, the stock market could go a whole lot lower. And honestly, it just depends on what the Federal Reserve does next. If the Fed continues to get aggressive like the stock market believes it will, well, that means there's going to be a lot more restrictions in our economy. It's going to be a lot harder to grow as a business, and obviously businesses don't like that. Investors who are putting their money into these businesses want to see growth. They want to see profits, and they can't see that if the Fed continues to raise rates, so they're not going to put their money behind these companies. And the last thing that we need to discuss is the economy in general, because as these businesses make a lot less money, that's going to trickle down to the employees, and they're going to start firing people, and they're going to start laying people off, something that we have slowly started to see in 2022. As more and more people lose their jobs, well, that means inflation in our economy is going to go down because there is no money circulating around. People are not going to be able to buy as much as they could before because they don't have a full-time job anymore. So now inflation naturally starts to come down because there is no spending, but that also means that businesses have no profits and revenue. So it's kind of a double whammy. They're not getting that investor money, and of course, they're not getting any money from sales. That means we could ultimately see a ton of companies go into bankruptcy and eventually disappear over the next year or so. And as our economy starts to shrink, GDP shrinks, people are spending less money, businesses aren't growing as fast, there's not as many profits. Well, that means our entire economy could be on the brink of a recession. A recession is going to basically accelerate all of that. It's going to accelerate job losses. It's going to accelerate people saving more money instead of spending. Consumer spending drives around 70% of our GDP and our economic growth. So without that, well, your entire economy is set to fail. And furthermore, like I said at the beginning of this video, it means that the Federal Reserve's plan to bring down inflation is not working, and investors are worried about that, and consumers are also worried about that. They have been raising their interest rates aggressively over this year, but it's not affecting food prices. It's not affecting shelter costs. And the fact of the matter is, it's not designed to. Those things are something that the Federal Reserve has pretty much no control over. That's why they look at core inflation instead of headline inflation, which takes everything into account in our economy. But you gotta remember, the Federal Reserve is in charge of inflation, so they still have to do something in order to bring it down, and the only thing they can do is completely shackle and restrict our economy. That's what they're going to do next, and that's exactly what businesses are worried of. It's exactly why the stock market is crashing. Now, it's important to also take into account here consumer expectations, and consumers do feel like over the next year or so inflation is going to come down. Right now they believe that it could come down by around 3 to 4% and hit the 5% mark by the end of 2023. That would be a pretty big improvement, but again, it's still way elevated from where it should be, and it means that things are going to cost a lot more for a very long time. And what the Federal Reserve does not want is a wage price spiral where, like I mentioned before, as things cost a lot more money, people need to make more money, so businesses have to pay them more. That means that people make more, which is really great, except for now they're buying more, and businesses have to raise their prices again, which kind of creates that vacuum of people don't make enough money again, so businesses have to raise their wages, and that's just a serious problem that can spiral out of control if you don't get prices under control. That is why the Federal Reserve wants to continue to raise its interest rates and lower its monetary policy, because it just wants to get everything under control with prices. Now, what's coming next in the future? Well, our entire economy and inflation is very fragile. If we start to see gas prices go up, if shelter costs go up, and food continues to rise, then yeah, inflation overall is going to go right back up. That could definitely happen because the factors that are controlling those things are all happening overseas, and it's not really something that the federal government or the Federal Reserve has much control, if any, over. So inflation is really fragile, and that's going to affect our fragile economy, because if things go up in price, people now need to make a whole lot more money. Obviously, the opposite could happen. So if we start to see some massive price reductions in a lot of industries, say supply chain issues get better, we have better energy, and of course a lot of the external problems that are causing inflation to go up suddenly start to go away, then yeah, inflation could disappear probably within the next year, but we just don't know how long that's going to happen. So the Federal Reserve taking every step necessary to bring down inflation itself. wealth. So the bottom line here is this: inflation is still going up in our economy. A few big things did go down, like energy costs, but overall inflation for other things like shelter and food and new vehicle prices is all still going upwards, and that's something that the Federal Reserve has to address with its interest rates. But it rides a fine line, because if it raises them too much too aggressively, well, then that could lead us into a recession, because now nobody's spending money on business, nobody is able to grow or start a business. Businesses that are existing, well, they might end up failing, leading to heavy unemployment, no spending, and a lot of saving in your economy. That's just going to shrink everything else even faster. So they have to be very careful, but they can't really do the opposite either by lowering their interest rates and just stimulating our economy fast again, because that's just going to mean inflation gets out of control and goes even above the 9% mark like we saw a couple months ago. You can expect to see inflation over the next couple of months. Inflation is going to exist for a very long time, and the fact of the matter is there really isn't much the Federal Reserve can do about it at this point. A lot of the things they want to do are not going to have a direct effect. What they're going to cause is mass unemployment and layoffs, which, yeah, will bring down inflation because nobody has a job to spend on groceries. Like I said before, we are at a tipping point right now in our economy, and it really could go either way. If we're going to be in a really deep recession, or if we're going to have more economic expansion, that is all going to be determined by the federal government and the Federal Reserve at this point. So their decision is more critical at the end of September than it pretty much ever has been before. But now I want to hear from you on this issue. What do you think about the most recent inflation numbers? Do you think that inflation is eventually going to come down in our economy and the Federal Reserve is going to fix it all? Or do you think that inflation is already too far entrenched and it's going to continue to go up for the foreseeable future? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.